I bet you never saw the products of $800 billion Broadcom. Think about it. You know what products and services that Apple or Microsoft or Amazon or Meta or Tesla sell. Yet Broadcom is the 10th largest company in the world. It's bigger than 154-year-old ExxonMobil. It's twice the size of 187-year-old Procter & Gamble. It's 3 times more valuable than 132-year-old Coca-Cola, and it's 4 times the worth of 113-year-old IBM. Yet Broadcom is a company that you have probably not seen its products. Welcome to this Valuation Masterclass case study. My name is Andrew Stotz. Remember to click in the link in the description to grab my top 500 global companies cheat sheet for free right there. In this video, you're going to learn why Broadcom is the fastest growing brand in the semiconductor industry. You're going to uncover Broadcom's unique acquisition strategy. We're going to assess the effectiveness of Broadcom's competitive advantage, and we're going to evaluate Broadcom's potential using my cheat sheet for assessing the attractiveness. Should we buy it? Should we sell it? What should we do? And you get that cheat sheet and the presentation, this one, for free by clicking on the link in the description. So what's this company's background? Well, it's a powerhouse in tech. Broadcom is a global semiconductor and infrastructure software company that designs, develops, and manufactures and supplies a wide range of products. In fact, so wide that it's hard to even really get it all into your mind. Broadcom is an amalgamation of a portfolio of 16 semiconductor franchises and 2 leading software franchises that have come together to form the company that exists today. So let's look at some of the revenue. The revenue of this company is $36 billion, and that was in 2023. And it's coming from 2 main segments. 77% is coming from semiconductor solutions, which are things like networking, server storage, broadband, wireless, the like. And then infrastructure software like mainstream, cybersecurity, and the like. Its top customers, well, 20% of its revenue is derived from sales to Apple, and 10% comes from sales to Samsung. So Broadcom has a diverse global footprint with strong contributions from various regions. 35% of the revenue comes from the United States, 25% comes from Asia Pacific, which is pretty significant, 20% from China, which is huge, 15% from Europe, Middle East, and Africa, and then 5% from the rest of the world. That exposure to China and to Asia, that basically means 45% of its revenue is coming from Asia. Broadcom thrives in Asia Pacific through strategic partnerships with global tech giants and a focus on key semiconductor manufacturing hubs. So the company has its origins in 1961 in relation to Hewlett-Packard. Broadcom's roots trace back to Hewlett-Packard's semiconductor division. In 1991, it was founded by Henry Samueli and Henry Nicholas in Irvine, California, and it IPO'd in 1998. Broadcom went public during the tech boom. Remember, 1998 was just before 1999 when we had the peak of the tech boom. And then it all crashed, of course. In 2016, Avago acquires Broadcom, combining semiconductor and enterprise software expertise. And from 2017 to 2019, they had many strategic acquisitions. They expanded its presence across networking with Brocade, cybersecurity with CA Technologies, and software with Symantec. And in 2023, it acquired VMware, diversifying its business further into cloud computing and visualization solutions. Now let's look at this chart. It shows the effect of these acquisitions on revenue and net profit, going all the way back. But the key thing, we can see the different acquisitions over time, but Broadcom's revenue grew with each acquisition, but net profit showed some variability. Profits peaked after Brocade, but dropped post-CA due to integration costs. It hasn't always been successful in its acquisitions, but they rebounded post-Symantec with organic growth. So it's the 3rd largest tech acquisition in history when Broadcom acquired VMware in a cash and stock deal worth $61 billion. VMware's visualization software allows a single computer to act as multiple machines, helping companies manage cloud networks and data centers. The acquisition propelled Broadcom's software segment, driving a 200% year-on-year revenue increase, contributing $4 billion in third quarter alone. Now, I told you that we would learn why Broadcom is the fastest growing brand in the semiconductor industry. So let's get into it. As of 2023, Broadcom is the fastest growing semiconductor brand in terms of brand value. And we can see on the chart by brand finance, it is got the fastest growth, up 29%. Let's find out why. Well, in 2023, Broadcom achieved a revenue of $36 billion, which is an 8% year-on-year increase despite no acquisitions since 2020. Its semiconductor solutions segment grew at an impressive 18% CAGR over 3 years, showcasing consistent innovation and customer demand. And the operating profit grew by 9% and net profit was up by 11%, reaching about $11 billion. So, growing common stock dividends at an average year-on-year growth rate of 42%. Back in 2016, the company had a dividend per share of $2, and in 2023, it's now $18. This growth emphasizes the company's focus on returning value to shareholders over the years. So let's recap. What is the company's background? Broadcom shows strong financial performance in 2023, maintaining consistent growth. Not all acquisitions have led to profitability, and the VMware acquisition strengthened Broadcom's cloud presence. So what is the company's competitive strategy? Well, again, it's in the infotech industry, 20,000 employees, $36 billion in revenue. And the main segments, and we talked about, were semiconductors and infrastructure software. Its competitive advantage is through a diversified portfolio backed by strategic acquisitions and strong customer partnerships. So how did they achieve it? Well, these acquisitions, innovations in semiconductors, strong customer relationship, operational efficiencies, and a focus on high growth. Basically, the company is pushing into so many areas. Next, let's uncover Broadcom's unique acquisition strategy. Remember, you can get that cheat sheet and this presentation for free by clicking on the link in the description. Broadcom's strategy is simple. They focus on acquiring market-leading companies with sticky customers, recurring revenue, and high margins, but with excess costs so that they can cut those costs. It then streamlines operations by cutting middle management and sales and marketing functions to create a leaner organization. Now, this strategy works particularly well for semiconductor businesses where growth is driven by content upgrades rather than expanding the customer base. And this approach leads to much higher margins and cash flow generation that's focused on core products and profits. The net result of all of this acquisition activity is a large, diversified company with a market cap of $800 billion with 23 divisions. The company is powering the AI boom. One of the key products seeing massive demand in the Gen AI boom is graphics processing units, accelerators. Let me explain what they are. A GPU is a processor designed to handle complex and heavy computational workloads. GPU accelerator boosts the GPU's performance by efficiently handling specialized tasks. Broadcom does not compete with NVIDIA directly, as it does not design and supply GPUs. Instead, it supplies GPU accelerators, which help GPUs work better for specialized tasks, making them indispensable to the system. So they're capturing the AI wave for sure. And Broadcom is strategically positioned to capitalize on the growing demand for AI semiconductors. The company's developed specialized AI chip designs tailored to meet the specific needs of hyperscale cloud providers, allowing it to cater to their high-scale requirements. So the company secured partnerships with major clients like Apple, Google, Meta, and ByteDance for its AI integrated circuits. Broadcom has long been Apple's go-to supplier for Wi-Fi and Bluetooth connectivity, as well as for other components like touchscreen controllers, as an example. Broadcom's market leadership and strong customer relationships provide a long-term competitive advantage. So what is its competitive strategy? Well, acquisition strategy focuses on cutting costs and boosting efficiency. They power the AI boom with GPU accelerators, and strong partnerships ensure a competitive market edge. So, does this strategy lead to a competitive advantage? That's the question. Is the company financially world-class? I use my world-class benchmarking scorecard to measure if a company has a competitive advantage. I developed this scorecard 10 years ago, and here's how we construct it. My team gathers the yearly and quarterly financial data of 26,000 companies worldwide. We then calculate each company's profitable growth score, which is a composite measure of both profitability and growth. After that, we rank the company relative to sector peers of a similar size. We don't want to compare a small company to a large one. And then a decile ranking of 1 or 2 is financially world-class, while 10 is the worst. We assess the company's performance over the prior 4 years and past 12 months, which we call PTM. So, is Broadcom financially world-class? Well, to get this, we look at our world-class benchmarking scorecard, and what we see is that no, Broadcom is not financially world-class. It was ranked an 8 in 2020, and a 3 and a 4 in 2021 and 2022, so getting close to 1. It was ranked number 1 in 2023, but that ranking came down to 8 in the past 12 months. So no, it is not. Now, revenue has dropped to global industry average in the past 3 years. So the question is, does its strategy lead to a competitive advantage? The answer is no. Despite its strengths, the company ranks poorly on our world-class benchmarking scorecard, except in 2023. So what does the valuation look like? Broadcom's stock price momentum indicates investor optimism. The stock has strong uptrend and it's been moving above its moving averages, but concerns, of course, about sustainability of the share price rise because valuations are very, very high. So let's look at this. I'm going to use my FEMR methodology to determine the attractiveness of the company. So we're going to look at F in FEMR, which is fundamentals. And here we can see net margins are consistently higher than the global industry average. Broadcom's transition to enterprise boosts margins due to higher recurring revenues, and its disciplined cost management provides long-term profitability. And finally, the cyclical nature of the semiconductor industry poses some risks to sustaining this margin. It's an incredible margin of 39% in 2023. Unheard of, probably one of the most profitable companies in the world. What about V, the valuation, or momentum? Well, here we can see EPS has been a CAGR of 28% from 2015 to 2023, which is 22 points above the global industry average. But almost all of that's coming from 2017, when it was up 500%. Now, it did have a great year in 2021, up 126%, but right now it's about double the industry average. So let's now look at risks. Well, let's go through the FEMR scorecard of Broadcom. Broadcom trades at a PE of 165. That's correct. It's the highest of all the largest 100 companies in the world. And it's not some anomaly like the company has had, for instance, a very low level of earnings. Nope, that's not the case. The PE is very high. Remember, you can click the link in the description to get the abbreviated FEMR scorecard for the world's top 500 companies. Drop your email, and I'll also send you my updated FEMR scorecard to your inbox every single week. So, what does the valuation look? High PE suggests significant market optimism, but raises concern about potential overvaluation. Recent rise in net margin may not be sustainable given its declining EPS growth and competitive pressures. Would I buy the stock right now? I don't think I would. It's just way too expensive for me. So I bet you never saw the products of $800 billion Broadcom. If you've seen their products, you've got them sitting on your desk or you use them regularly, put a comment in the chat. That is Broadcom.